if you've done one deal or no deals, would you give the person who's done 19 deals or the person who's done one deal? And it doesn't mean that they're not worthy of the money. It just means it's not going to come as easy for you, and you better have your stuff really organized. And you better know what you're talking about and back up what you're saying, and have really good partners.
Welcome to The Real Deal, a commercial real estate investing podcast. I'm your host, Aman Shahi. There's a ton going on in the world right now, and much of it impacts real estate investors. The Real Deal podcast will take a look at what's happening and how it influences you as a real estate investor. Each episode is a 20-minute segment dedicated to distilling the day's most important news, so you can stay up to date on what's going on in the world and how it might affect the commercial real estate market.
Welcome back to another episode of the Cashflow Capitalist Show. My name is Aman, and today we have a very special guest, Chris Collins. Hey, Chris, welcome to the show.
Amazing. Thank you for having me, Aman. Nice to be on here.
All right. So introduce yourself in 30 seconds. Tell us who you are.
30 seconds. My name is Chris Collins. I live in Southern California. I'm a father, a husband. I live by the beach. I come from the world of Hollywood and television, but I moved the majority of my life into real estate investing. I'm also a musician. I've been on tour around this country many times, and I'm a people person. I like people, and I like to meet new people.
Nice. Which beach do you go live by?
I live in Newport Beach.
Oh, nice. That's a nice area. That's a really nice area. So, how did you get into real estate?
I got into real estate because I saw there was a need for a future for me that wasn't just my job. I had a great job in television, editing unscripted reality TV, which is very fun. It's very fulfilling. It's creative. I can interact with people when I want to, but generally I'm by myself telling stories. And that's been my whole career. And I'm really good at that. And the problem with being good at something is you get paid well for it. And it sounds counterintuitive to say it's a problem, but it's a problem if you can only make so much money. So I had these golden handcuffs of, making enough money to have a comfortable life, but not making enough money to have a big future and a financially free future and a future where I'm not worried about money. I would always be working for that next paycheck. And so we got pregnant with my son, and I decided I have to figure out something else that has other streams of income, other ways to have more money grow for me than just my job. I met a lot of people in their 50s and 60s in the TV industry. When you ask them about retirement, they say, yeah, I got to figure that out. Like, man, I don't want to be 60 and try to figure it out. So I started to get into real estate investing.
So when you in the TV industry, did you have any kind of investment at that time, or you were just like totally nothing and taking a new start?
Everything I had done was in the stock market. So investing in equities and managed accounts at Fidelity and trying my hand at buying stocks, which is really just gambling for me. I was not an expert at the stock market.
Did you get any help from TV industry? Like people say that like, people in Hollywood have a lot of money. A lot of like celebrities, they want to invest and all this thing. Did that help you in any way?
Well, it didn't help me get into real estate. I was the only person I know who was jumping into investment real estate. And I just made that decision and I started learning. And the nice thing is for me is I had this great paying job. So I didn't have this urgency that I had to quit my job and I had everything on the line. I had to go and learn real estate. I spent 2 years just learning real estate from scratch, from the bottom up, learning it really in depth, learning every nuance of it, every in and out, all the lending, all the acquisition side, how to property manage. So learning as much as I could and meeting people. So I spent a lot of my time meeting new people and having coffees with people, having lunches, jumping on phone calls, going to meetup groups. I didn't know about, there wasn't, or maybe there was, I just didn't know about, there wasn't like coaching or real estate conferences, all these things that are out there now. I just was finding my way and meeting one person and networking to the next and networking to the next. And so people in the Hollywood industry have money, but a lot of them spend a lot of their money because they don't know what to invest in. So where that really came into play is once I had been investing for a few years and owned some houses and invested in some apartment complexes, and I was taking it a little bit more serious as a business rather than just my investing. I had a lot of people from the TV industry reach out and start asking me, because they kind of hear what I was doing, on a given weekend. They would go out to a show or go out to a restaurant, and I would be just flying in Monday morning from touring real estate properties, from touring more apartments, from seeing our apartments we already own. And so, the water cooler talk at work, like, oh, what'd you do this weekend? I was here, I was there. And where were you doing, Chris? Oh, I was in Texas, checking out another one of our properties. And everyone has one of those moments of, what is it? Say that again. So what do you do?
You own apartment buildings?
Yeah.
How did you buy it?
Yeah. And you were across the country, not here in LA. And I was like, oh yeah, this isn't. And I didn't really think of it as, I wasn't trying to bring people into my world. This is just what I was doing because it was for me and my family. And so people started asking, hey, can you teach me what you're doing? Can you help me? And it's kind of hard to help people do something where you've been doing it for years, right? It takes years of study and learning to get good at this. So I realized that I could help them. The best way I could help them was simply by bringing them into deals with me. Because as passive investors, and if they wanted to learn along the way, it's like, look, I'm doing this anyway. I'm investing in this deal, and here's why, and I'm putting my money in it. Whether you put your money in it or not, it doesn't matter to me. I'm already doing it. And I think people really like that. They like the confidence they could have knowing that, it's an opportunity for them to get involved with me. But if they don't, it's not like I'm going to turn things down because they're not. I'm going to do it anyway because ultimately I have a vision for myself and my family and our wealth. And now I've been able to help people from the Hollywood industry who do have money get involved in real estate. So now they can be passive owners and passive investors, still spend time at their job that they like, make their 6-figure salary, spend time with their families on the weekends. They don't have to deal with being a landlord and deal with the hassle of finding properties and deal with property manager and brokers and all that stuff.
Have you met anybody who want to be like, active investor, but they don't want to do the work?
They want to be active investors. I think a lot of people start out thinking they want to be active investors. And once they realize exactly what it takes, they either end up doing nothing, which is kind of the worst case because they're missing out on everything, and they're missing out on the potential that they could have if they really apply themselves. Or they call me and they go, look, I don't really want to, I ask a lot of questions when I talk with investors, and I'm just trying to feel out who they are, what they're looking for, and get a sense if they're better at that. You should be an active investor. You want all this control. You're already into it. You like the numbers. Go be an active investor. But a lot of people, they think I want to go out and find properties, and I'll just describe to them for a little 10 minutes what it's like to go and buy properties, manage properties, deal with property manager, make all those decisions. And a lot of times when they distill it down, what they want is passive investments. I think they don't want to, maybe, I don't know what it is about it, but I think they start out wanting one thing and then they realize, no, I want to spend time with my family on the weekends. I don't want 2 jobs.
I want good return.
Yeah, exactly. They want to know their money's in a good safe, not safe. They want their money in a good investment that's risk averse, but still going to grow more than the stock market.
So did you start before in a single family or straight jump to the multifamily syndication? How was that?
I bought single family homes. I thought that was what I was going to do, is amass a portfolio of 50 houses. And I still think that's a good plan. It's just a lot of hassle and it's a lot of work to find 50 properties and close on 50 properties. And so I started with houses, and then I moved into passive investing as a limited partner in real estate syndications. And from there moved into more the active side, because I kind of did the opposite. I started thinking I want to be a passive investor, but I don't know about you, but if I had 100% passive income and I'm sitting on the beach drinking, I would get very bored. I'm a very active, I like business, I like movement, I like energy. So that fit me more. So then I started doing more of the work on it.
And people told me you can relax, you're going to invest passively. I'm like, I cannot. my mind is running 24/7. I cannot. I want to be on some sort of track all the time. I cannot just drink pina colada and enjoy the beach. I can't. I'm going to be bored from that beach. Even if I have like $20 million, I can't.
Sure.
And so tell us about your first multifamily deal.
My first multifamily deal as a passive investor was with someone I had met through a podcast. And I had reached out to this person asking him to teach me. I spent a lot of time just asking for, hey, can I get 30 minutes of your time and just ask you a question or two? And so I was calling this guy to ask him about construction management and maintenance and just try to understand that side of the puzzle. And it turns out he is buying properties and was syndicating a deal. And so we bought an 84 unit in Lexington, Kentucky. We bought it for $2.6 million. And it was such a great story because I would tell people all the time, I was living in LA, they're looking at these houses and it's $1 million or $800,000. I'm like, oh yeah, we just bought 84 apartments for $2.6 million. And their eyes would fall out of their head. The numbers are so different. But I was a passive investor in that deal. I learned a lot. On the good and bad, I learned pros and cons. I learned positives and negatives. I learned what to do and what not to do. We made a pretty good amount of money on that. I think we all made 16% average returns on that deal. It was the first deal of many, but I ended up, that deal, we didn't have any, I don't know if we did distributions on that deal. I was a passive investor. It was a long time ago. And so, but one thing I remember is it was the first deal we actually had a capital call where at some point the syndicator said, hey, we need everyone to pitch in some more money. I'm like, okay, tell me about this. How does this work? And it's the only time I've had to do a capital call. But it was an interesting story because we had a construction issue. There's a water line from the street that broke and flooded 12 of our units. So insurance should cover that, right? But the problem is insurance takes a long time. So it was a really interesting capital call because it was like, hey, we need you to, everyone put this money in. We're going to fix these units so we can get them rented right away. And when insurance kicks back in, well, I'll get paid out our money. But we can't just wait 12 months for that to happen because we'll be losing too much revenue. So that was my first passive investment. And my first active investment in multifamily was a 253 unit apartment complex in San Antonio. And I partnered up with a partner that I'd invested with passively and gotten to know over the years. And he was kind of the first person to say, hey, look, I know you've been talking to your friends in the television industry. What if we partner up on this deal and go and buy this apartment complex in San Antonio? So that's what I did. So I go to my investors, but they're really just my friends. And I said, hey, look, I'm doing another deal with my partner here in Texas. I'm doing it whether you want to or not. But if you want, I'll put your money in with mine and we'll go and buy this deal together. And we still own that deal today. And it's been great.
And how much did you raise for that deal?
Not a lot. I mean, that deal raised maybe $500,000.
But that's still good. Like for your first raise, that's still good. I still consider that as a good raise.
Sure. Yeah.
And how many no's did you get? How many yes did you get? And how many people actually give you the money?
That's a great question. You get a lot of yeses. Really interested. Absolutely. And then, okay, cool. Are you ready to wire that check? The thing is, I think I'm going to do this or this instead. So I don't have exact percentage for you. I wasn't tracking the numbers as much back then. It wasn't as much of a business as it is today. But I mean, I don't know. I probably had twice that amount of money in my head that I thought, from all the interest I thought would come in. So I would say about 50% of people actually came through and committed and signed and wired funds.
But they say even 10% is a good number too. But you said 50%, that's a great. And did you have any kind of experience in your life when you were going every time you're trying to achieve something, you're having a no, then suddenly a yes came. And people say that prepares you for something big.
I like that thesis. I have always been someone who just does the work, and I get a lot of I could tell you a good story about that. So in my television industry before this, I went to college in San Diego, and everyone else was just doing school, right? They went to school and they kind of accept whatever was being thrown at them. But for me, I realized I need to have internships. I need to have real world experience. I can't just graduate college and expect to have a job in Hollywood. So I went out and I found in San Diego, there's not a lot of television industry in San Diego. It's not known for that. So there's two places that made commercials, and I found one of them that was near my school, and I walked into there on a Tuesday, just walked in the front door, and I said, "What do you guys do here?" They said, "Oh, we make television commercials." And I'm like, "Okay. Like, do you have a HR department or anyone I could talk to about working here?" This is like a 6-person company, very small. And this is just the secretary. She's like, "I guess you could talk to Stacy." Okay. So I go in and knock on Stacy's door. I'm just this random kid who doesn't know. And I proceeded to just offer them my services for free. "Hey, can I come work for you for free? I need an internship. I'm looking for some experience." She goes, "Oh, no, we don't really need that." I said, "Okay. Maybe I misunderstood. I want to work for you for free." And she goes, "Oh, no thanks." Okay. So I left. I came back the next week. "Hey, I just wanted to check in. I don't know if you quite understood. What I'm talking about is just coming in and doing whatever work you need for free." So it's like I got a no over, and I had to do this 3 times. I got a no over and over and over for trying to do something for free. It was the most ridiculous thing I'd heard. But eventually I got a call on a Friday. "Okay, Chris, look, can you come in tomorrow? We're going to go shoot a commercial for was it like a furniture store?" So yeah, I'll be there tomorrow morning. So showed up the next morning, worked for them for free for about 6 months, just doing anything they needed. And then eventually they started paying me because I think I added enough value that they're like, "Okay, well, shoot, now we can give you a job here. You know what you're doing. You show up every time." So then I started getting paid. And I did the same thing in LA. I moved to LA. I was interning there, driving up to LA from San Diego 3 days a week, working for free. But when I graduated school, I walked into a job day one at a pretty good sized production company. So yeah, I don't know. I don't get a lot of no's, but if I do, and I already have a vision for it, I'm going to put the work in to make it happen.
That's a great story. That same happened with me. I was applying for engineering job, like literally so many. I have like 6-7 different emails. I'm applying. I'm like, "I'll do work for free. I'm overqualified." They were like, "No, we don't want you." I'm like, "Okay." But the job I got, I never applied for it. It was like I got so many no's, and the yes came out of nowhere. And that was a beautiful moment, and I got the job.
Love it. Good for you.
So for when you partner with somebody else for like in a new deal, new partner, what do you look for them? What do you look in them?
A great question. So when I'm investing money with someone, I do a pretty thorough check on who they are. At this point, I know a lot of people. So I ask for referrals from other people. Like, this person will never know that I'm really doing a lot of research on them, but I'm going to be talking to everyone else around them. I meet with them in person. I get to know them as a person. I think you can tell a lot with people when you interact with them, kind of their level of professionalism, their transparency, what they talk about. I know some pretty smart people. I'm very impressed when people are really smart, and you can tell that right away. And I think it comes through in the conversation and the dialogue. And, say things go from joking about whatever, and then you're acting about something about the business that gets really serious and focused. I'm like, "Okay, cool. You know the business side of things." I want to see a really strong presence in that market. I've learned over the years, you don't have to be local to the market, but I prefer that. So my investors trust me because I partner with people who are in the markets. So my partnerships are really strong actually in the market. So if we're going to buy a property in Dallas, my partners are in Dallas and they're 15 minutes from any property. Same thing in Iowa or Arizona or other parts of Texas. So I want to know that they're local. I want to know that they have a strong team around them, that it's not a single person who's trying to figure out everything. And, oh, by the way, they have their family and they got another job. That's too many things. This is too much money on the line. So when you call me, today, this is the focus. The focus is real estate and the focus is investors. And I want to know the same thing from my partners. And I want to know that they've done a fair amount of deals. I don't want them to be new. There's too many other people that I could invest with that are not new. It's something that I instill into newer investors who are trying to get into the active side often these days, which is they call me looking for advice on how to raise capital or how to meet new investors. And I give them a pretty quick thought experiment. I'm like, okay, so I have $200,000 and you want me to invest in your deal. You're new. Why would I give you a check versus all these people who have done 5, 10, 15 deals? Right now, I'm working on property number 20 today. So if you've done one deal or no deals, would you give the person who's done 19 deals or the person who's done one deal? And it doesn't mean that they're not worthy of the money. It just means it's not going to come as easy for you, and you better have your stuff really organized, and you better know what you're talking about and back up what you're saying and have really good partners.
And will you invest if they partner with somebody who has done 20 deals?
I will probably already know the person who's done the 20 deals. So it's a tricky question because the answer is yes, but probably not with that. I would probably have been talking with the other person. You know what I mean? If there's multiple partners on a deal, then there's a good chance I already saw the deal or I know the person in charge of the deal. Because someone's got to be in charge. You know, if there's 4 people that are working on a deal, there's different aspects of a deal. And that's important to know the different aspects of what goes into a real estate transaction. And at some point, it's going to hand over to an asset manager, and that's when the business plan is going to start. The underwriting's got to be good at the beginning. I need to know that the underwriter knows they're doing. But then once the property business plan starts, that's the person that you need to be able to really handle operations on a daily basis at a high level. That's where the money can grow or disappear.
Yeah, in the beginning, you just work as your internship. Even you are an active investor, and even if you bring like $500,000, you still as an internship because you're partnering with somebody else, and that person is controlling everything. You're just learning from them. You're just working with them. You're literally working for them. And what do you look for in passive investors?
Right, look for impact, like people who are looking to invest with me.
Yeah.
So I want to know that they are aware of what the deal is and what the risks are. I spend a lot of time talking about the risks of investing. I want to know that they have they're not going to know as much as someone like me or you who do this for a job. They're not going to know all the ins and outs of a deal, but they need to understand it to a point where they could explain it to someone else. This is what I'm invested in. So I have plenty of investors who are looking to invest today, but after I talk to them for 30 minutes, I'm like, look, let's have another few calls. I don't feel, if I were in your shoes, I wouldn't want to write a check for $100,000, let's say investor A, because they're not quite educated enough. But then there's plenty of investors who have been looking into this for a long time. They've been watching all my social media content for a year, and they're just now finally calling me, okay, look, I already know everything. I feel like I've been watching your content. I read your ebook. I'm looking to invest in the next deal. And then I'm really asking them questions about their goals and their future and their finances and what, do they have kids coming up to college soon? Are they going to buy a new car? Are they going to sell their house? I'm trying to get a financial picture of where they're at. And really, is this a responsible investment for them? Can they have their money locked up for 3 to 7 years, potentially, depending on the given deal? And, there are some investors that I choose not to work with on a personality level, I would say. Like if they're clearly, they should be active investors. They're very controlling people and they want to know every single detail. I'm like, you sound like a great investor on your own. You should go and be active. Passive investing for you might drive them nuts, And I've learned that over the years with certain investors that it's not that fun to have them in deals. And, it's a level of trust. They have to trust that we're doing the work every day on these properties. And I want them to be learning and paying attention, but there's a line at some point of like, let us do our job, If you want to be that involved, be the active investor, and that's fine.
And what do you see, when you talk to a new investor, what people get wrong about syndication? Many people have different ideas.
Oh, that's an interesting question. What do people get wrong about syndications? People think that I'm a realtor sometimes, that I'm selling apartments.
Yeah.
So Chris, do you have your license then? Like, I'll have a license.
I get that question almost every day.
Yeah. People want to know, what brokerage I work for, or if I work for a company. They want to know, you know, people often think that I'm managing the properties. Like we buy a 200 unit property and Chris is the one finding the tenants. And we have full-time property management on staff with the leasing office, and they tour properties with tenants and stuff like that. So there's that. And then I think people are sometimes surprised that it's only a $50,000 minimum on most deals. I think some people see these buildings and they go, well, I could never get in. I could never own a piece of that. And so just the concept in general is they don't think that they could be involved, and they're shocked that they can get access to these private deals. If you know someone like you, or you know someone like me, we're going out and buying them, but you're never going to find them on the stock market. You're never going to find them on the, on a Craigslist ad, but you can get access to them. You just need to network and get to know the people who are buying them.
That's a great answer. And if you talk about acquisition, what metrics do you follow while picking up a new property?
So I'm really looking for upside. I generally work in heavy or medium value add properties where we're buying a property with discounted rents to the market. So I want to know that there's a way that we can bring our rents up. I'm not trying to buy properties where our rents are already at market. And I need to know that that's realistic, that it's not just saying we can get the property up. It's like, we'll go visit the site and see, is it realistic that your rents can raise up? And what are you going to do about that? And is it cost effective? So I've really gone from, I feel like when I started, I lived all in spreadsheets. Everything has to make sense on the math side of things. And now it's almost like that's assumed. Well, now let me go visit the property and look around and feel it and get that sense and talk to the residents there and feel, would you pay more if this was nicer? Because on the spreadsheet, it says, yes, you should. But when you talk to people there, and they say, the management here doesn't care about anybody, I can't wait to leave, they're not going to pay more in rent. They want to move to another place down the street when an opening comes up over there. So is there a plan to change out management, for instance? Is there a plan to renovate all the units? And then also looking at the kind of trends in the market, and is this area of town going to grow or shrink? Is it going to kind of stay the same? Because that's going to impact your ability to sell this property down the line. Especially today, really looking at insurance, taxes, looking at what are cap rates projected to be in 3-5 years on this deal. Man, we could talk for 2 hours on acquisition side of things, but those are the main things. The main thing of every business plan, are you going to be able to increase rents, and are the property values going to be higher when you sell it? That's
value add.
Yeah. And for me, that's my focus, because I'm still in wealth building mode. My investors are still in wealth building mode. So we want to see these properties grow, versus sometimes people are already wealthy. They have multiple millions of dollars. They just want to preserve their cash, and they want to be in a nice, stable, risk-averse investment as possible. Their money's not going to grow a ton, but it's not going to lose, because you buy a A-class property in the middle of uptown Dallas, it's not going to go anywhere. But it may not appreciate as much because it's so expensive when you buy it.
Yeah. And as we know, right now, we in whole Texas has high insurance. Are you still buying in Texas?
Yep. You just underwrite to it. I mean, look, the reality is the last year, a lot of the rates have already done this in Texas. So insurance rates have gone up 20, 30, 40%, some even higher. So if you're looking at a deal now and you're looking at the T12, the past 12 months of expenses, and you've seen insurance go up, then as long as you underwrite some growth in the future, they can't keep going up forever. No one can own these properties if insurance keeps going up that much. They're kind of underwriting insurance on, COVID and how the economy is doing and inflation. So at some point, they're going to run out of excuses to keep raising interest rates or insurance rates. Sorry. At some point, they're going to stop. They're going to run out of reasons to continue to rise. Saying this all backwards, but insurance can only go up so much forever. So as long as you're underwriting to that, then you should be okay. And when you get insurance quotes, they're going to give you, it's going to be $500 a door, $600 a door, $900 a door. So if you can underwrite to $1,000 a door of insurance, then you're already conservative in your underwriting. And then you underwrite growth as well each year. So yeah, it doesn't to me, those numbers don't scare me. It just means put it into your underwriting model. And if it makes sense, great. If it doesn't, then the deal breaks and you don't buy it.
And when you send a LOI, which is like really lower than expected, what response do you get from brokers? Because I got really bad response. How are you underwriting? This is my underwriting, bro.
That's the name of the game. I mean, brokers, to me, that's all about the relationship ahead of time. If you just meet a broker and you send them an offer like that, it's totally going to depend on the day if they take you seriously or not. But if you've developed a relationship with a broker, which is a whole other thing to talk about, but developing relationships with brokers means that when you do send them an LOI for lower than they expect, they can still take you seriously, knowing based on our conversations in the past, I know you're serious. I know you have experience. I know you have money. I know that you make money by making offers like this. So when you get an offer like that, they don't go, write this guy off. They go, well, I get it. This is part of your business. They're going to present it to the seller. It totally is going to depend on the market that you're in, what submarket, if that offer is going to make sense. We've had offers on our properties where, the broker's like, look, we got 10 offers. These 6, we're not interested. So here's the 4. They read it off that quickly. It's not even on the table. So, but if they only had 4 offers, then they're going to look at yours, even if it's low, because you never know what you're offering might not be just the numbers, might not just be the dollar amount, but you might have a quick close or a lot more cash to put down or earnest money day one. So there's a lot of stuff that goes into it. It's not just, I think people think that buying and investing in real estate is how much did you buy it for? Like there's a lot more that goes into an offer than that.
And what are you seeing? What kind of market trends are you seeing right now in 2023? It's a whole big question.
Yeah, 2023 has been a very slow market. And I'm not sure if your other guests have talked about this, but what I see is, and we've done this because we do this with our properties, but if you own a property and your loan is in a stable place to just keep your property, then people are not selling right now because the market has dropped too much because interest rates are too high. When interest rates are high, I can only offer so much money for your property. Well, if in the last 2 to 5 years, brokers have been calling us saying, hey, your property is worth $25 million. You should sell it. We can sell it for $25 million. And then you put it on the market today and people are offering you $17 million because interest rates are so high. Why would I sell it for that? I'll just hold the property and I'll just keep cash flowing to our investors. So if you have a good loan, then you just hold your property and you go, look, we'll look at selling this in a couple of years, no problem. And what we're seeing and how we're picking up deals is some people's loans are coming due, or they have a rate cap that's expiring. They have a cap rate interest rate cap that's expiring, and they haven't quite made enough money on the property. They don't want to keep dumping more money into it. So they're not going to put money in to buy a new rate cap, which are very expensive.
Yep.
So they wash their hands of it, they sell it. Well, that's when transactions are happening, because then the low offer from buyers can match up with them because they don't have a lot of other choices. So then those will line up. But most of the deals today, and just to give you some numbers, I mean, the way that the world works is brokers will call owners and say, hey, I want to come out and do a BOV, a broker opinion of value, tell you what we think we could sell your property for. Sound good? Sure, come walk the property. So they go out, they walk the property, they do some numbers, they call the owner back, hey, we think we could sell your property for $20 million, whatever that number is. Just the BOVs alone, broker opinion, just those meetings and the tours are down by 70% this year. So that gives you an opinion of how many deals from there are even going to sell and transact. The numbers are just down. So I tell investors this year, there's not a lot of deals this year, but the deals that do come up, they fill up quickly because they're very obvious and they're very apparent and they stand out from the rest because we got a low price on them, we have a distressed seller, we can assume a loan, something like that. The deals stand out. And so all this investor capital that's sitting on the sidelines right now, waiting to invest in the next deal, it comes in really quickly. So less deals, but the deals do fill up quickly. I also think today, if you're investing in a deal, typically returns are going to be a little bit lower than they have been for the past 5 years. So I temper all the expectations of investors that just don't quite expect what we've seen.
And no deal is better than a bad deal.
That's true. Absolutely.
So what advice do you want to give to somebody else who's starting in real estate right now?
I think if you're getting started in real estate, you need to get educated and spend a lot of time on the education, and don't rush into it. But I do think you have to have the idea that at some point you do have to write that check and get invested. You can't educate yourself forever. You will get to a point where you've learned all the book knowledge, you've read all the books, you've listened to all the podcasts. It's time to invest the money. You're never going to get that feel of what it's like being an investor until you write a check. And it's going to be scary, and it's not going to be perfect, and it's going to be expensive and a lot of money, but you have to know that you've done as much as you can to secure your investment, to make a good decision. But you're not going to make a perfect decision. It's your first investment. But pretty soon it'll be your 10th investment, and then your 20th investment. And then you'll be walking around feeling out properties because you've been involved in so many of them that your investment thesis will tighten and get more strong. Your investment dollars will go farther because you'll be making smarter decisions. So I think, yeah, get educated, but then get involved, and don't be so scared forever that you never put in the money. And that's, for me, in my world, in apartments, it's expensive. You know, we don't buy small properties. You're not putting $10,000 into a property. So you're kind of, it's like, it takes a lot of money. So I get that I deal in a world with a little bit more money. And so the check size is larger. But even if you're just getting into single family homes, you're going to flip a house, or like, no, flipping is expensive. So don't add that to this conversation. But if you're starting out, at some point, you got to put the money in and get going.
You got to just start it.
Yeah.
And what books do you recommend, either for mindset or education?
Man, I could talk about books forever. So I would say if you're trying to get into real estate investing, the Millionaire Real Estate Investor by Gary Keller, I think that's what it's called, Millionaire Real Estate Investor. If you're getting into syndications, I think Joe Fairless's book, this one, The Best Ever. I just had this out because I was showing it to someone this morning. That book, Best Ever Apartment Syndication book. If you are still trying to figure out your finances in general before even investing in real estate, I think Ramit Sethi's I Will Teach You to Be Rich, great book. If you are trying to focus up your goals and trying to clear your mind of all these other things that are coming at you, I think The One Thing is a great book.
Yeah, that's going
to help you focus. If you're trying to figure out the financial side of things, the Burr book by, I think, David Green, it's a Bigger Pocket book. That book is great because it really breaks down a lot of the finances of investing and flipping and renovating properties. Man, I know I told you I can go on about books forever. I read a lot. I like to read a lot and be well informed. But those would be kind of my go-tos. And if you're trying to just start and you're trying to be active, it's going to be hard to go buy bigger properties and you're trying to buy a 2, 3, 4 unit. There's a book called Investing in Duplexes, Triplexes, and Quads that I think is a good primer as well. Yeah.
So since you are like now entrepreneur, what's your morning routine?
My morning routine is focused on my family. I get up with my son, breakfast, ride bikes with him to school, come back, spend time with my daughter, and then I'm usually on a phone call if I don't have a call at 8, it's usually 9 a.m. is when phone calls start.
And if you have to go back and restart all over again, what would you do different?
Man, I don't know what I would do really different. I would make it more of a business sooner on. I spent a lot of time, quite a few years, with a more organic approach, meaning if I happen to have a conversation with you over lunch and real estate came up and you found out that I'm going to go buy this, apartment complex, and oh, that sounds interesting. Well, then we'd continue the conversation and then you could invest with me. And nowadays it's more of a business. It operates more like a business. And I would do that earlier because I could have grown faster. But I think it's also a part of my story. And I think that's why people appreciate investing with me and working with me, is because I still treat it that way, in the sense that I'm not trying to sell anybody anything. It's like, if this organically works for you as an investment and you want to invest with me and you click with how I work, then great. If not, that's totally fine. Let's just go and talk about something else over lunch. And that's still how I treat things. But the back end of it is more of a business.
And the last question is, if today is the last day on this planet, what message do you want to give to the world?
Spread love and joy. I tell my son it every day before he steps out. goes into school. Spread love and joy. I learned early on that give what you want to receive. So if you want to receive love, give love. If you want hugs, give hugs. If you want money, give money. And to me, I value love and joy in this world a lot, and a big part of my being. So I try to spread love and joy. I try to receive love and joy. I know it sounds zhuzhy, but it's a big part of me. Yeah.
And if people want to reach out to you, where can they reach out to you?
You can find me pretty much everywhere on social media. My company is Amity Cashflow, Amity. You can find me at Amity Chris Collins. That's on Instagram, Facebook, LinkedIn. But the easiest way is to get in touch on my website, amitycashflow.com.
And thank you so much, Chris, for your time, for your wisdom and your knowledge. And I really appreciate it. And I'll see you another one.
Awesome, Aman. Thank you so much. Appreciate your time.
Thank you for joining us on The Real Deal, a commercial real estate investing podcast, the show that covers everything to do with multifamily real estate investing to help you become an expert in your real estate ventures. We're here to help you create passive income and financial freedom so that you can achieve what you want whenever you want. We'll catch you next time on The Real Deal.